When it comes to borrowing trends in the UK, July brought a mix of surprising resilience and underlying concerns. Despite a noticeable dip in lending activity, the numbers still managed to exceed expectations, offering both relief and room for debate among analysts. But here's where it gets intriguing. While some see this as a sign of economic adaptability, others warn that the figures might be masking deeper issues. So what's really going on? Let's break it down. First, it's important to understand what these lending figures represent. Lending is a key indicator of economic health, reflecting how willing individuals and businesses are to invest in their future. A drop in lending could signal hesitation or uncertainty in the market, potentially driven by factors like rising interest rates, inflation, or even broader global uncertainties. However, in this case, the fact that the numbers surpassed forecasts suggests there's still confidence in certain sectors, or at least enough optimism to keep things moving. But here's the catch. Interpreting these numbers isn't always straightforward. For instance, one might wonder if the better-than-expected performance is truly a win or just a statistical anomaly. And this is the part most people miss. Lending data can sometimes be influenced by temporary factors, such as seasonal spending patterns or short-term policy adjustments, which may not reflect the bigger picture. This raises an interesting question. Are we seeing genuine economic strength, or are we simply riding a wave of fleeting circumstances? Now, let's talk about back-tested results, a concept often discussed in financial analysis but rarely understood by beginners. Backtesting is essentially a way to evaluate a strategy by applying it to historical data. Think of it like rehearsing for a play using last year's script to predict how the performance might go. While it can provide valuable insights, it's far from foolproof. Why? Because past performance doesn't guarantee future outcomes. Markets are dynamic, unpredictable, and influenced by countless variables that no model can fully capture. For example, consider the assumptions baked into backtesting models. These models often assume ideal conditions, like perfect market liquidity and flawless execution of trades. But in reality, markets aren't always liquid, and trades don't always go as planned. This means that back-tested results can sometimes paint an overly optimistic picture. Changes in these assumptions, like a sudden lack of liquidity, can drastically alter the perceived success of a strategy. It's like planning a road trip based on clear weather forecasts, only to encounter unexpected storms along the way. And here's another layer of complexity. Backtesting allows analysts to tweak their strategies until they achieve the best possible historical returns. Sounds great, right? Well, not so fast. This process can lead to overfitting, where the strategy appears successful in the past, but fails miserably in real-world scenarios. Imagine tailoring a suit so precisely to someone's old measurements that it no longer fits when they've gained weight. That's essentially what happens with overfitted models. So why does all of this matter when discussing UK lending trends? Because understanding the limitations of financial data and the tools used to analyze it is crucial for making informed decisions. When headlines proclaim that lending has beaten expectations, it's worth asking, what exactly are those expectations based on? Are they grounded in realistic assessments, or do they rely too heavily on theoretical models? This brings us to a controversial point. Should we place more trust in hard data or expert predictions? Some argue that relying solely on historical data ignores the human element of economics, the emotions, behaviors, and unforeseen events that shape markets. Others believe that without data-driven insights, we're essentially flying blind. Where do you stand on this issue? Do you think the latest lending figures are a cause for celebration or caution? Share your thoughts in the comments below. We'd love to hear your perspective.